Hello everybody, my name is Rick Stockel. I am a realtor with Newman & Dunn Real Estate in Richmond, Virginia. Today is Wednesday, July 18th, 2012, and let's talk some real estate. Clear Capital has released its housing market report for June 2012. In my opinion, Clear Capital is the best aggregator of housing market data. I tend to follow their data a little bit more than some of the other places where you can find housing market statistics. They tend to be closer to what I actually find happening in the Richmond area. So anyway, here's a brief recap of this report, along with my commentary regarding this data. June did see further support for a housing price recovery. This has been the trend for the past couple of months, and it was good to see that it was confirmed again in the June statistics. Both quarterly and year-over-year data for the U.S. housing market as a whole showed a 1.7% increase. The western part of the United States showed the biggest breakout to the positive side, coming off its correction. Well, that's logical because they also had the biggest fall in housing prices. Some areas in the state of California, Las Vegas, Phoenix, some other areas in Arizona were just devastated by foreclosures. Upwards of 50-60% of some homes in some of those areas were foreclosures. So if you're the normal, everyday, hardworking, tax-paying person and you're trying to sell your house and every other home that you're competing against is a foreclosure, it's just natural that obviously the prices are going to be dropping. So it is good to see a big jump in prices in the western region of the United States and actually throughout the United States. So Clear Capital does see the rest of 2012 showing market improvement to a varying degree for most of the major metropolitan areas. Right now, the housing market is at the strongest point since the start of the downturn. Again, this is all positive news, both for my industry and those of you who are buying and selling homes, but for the overall economy as well. Clear Capital is cautiously optimistic for a slow continued climb out of the housing market morass. Clear Capital was very specific in stating, though, that the current strength in the housing market fundamentals do remain vulnerable to domestic and global challenges. Well, duh, that makes sense. If we have a euro crisis or if the employment data continues to remain weak or gets weaker, there'll be a lot of trepidation from potential buyers, and they're just going to hold off. So I wouldn't blame them. If I think our market, our economy was going into a recession, I think the logical thing to do would be to hold off. But of course, the smart money always makes money when things look like they're at their bleakest. They step in and make the good, bold investments. And just based on I've been in real estate now for 17 years, so based on my experiences and being an economist by education, I feel like last year, this year, the next year or two would be very, very good entry points into the housing market. So let's get down to the Richmond statistics, since most of you do live in the Richmond area. So let's talk some Richmond housing data. Of the 50 metro markets that Clear Capital measures, Richmond checks in at number 33 for its year-end 2012 projections. Clear Capital is projecting a 1.3% increase in prices for Richmond for 2012. Now, something that does affect prices is something known as the foreclosure market REO saturation rate. In Richmond right now, that stands at 19.5%, according to the Clear Capital data. And what that means is basically 1 out of every 5 homes on the market is a foreclosure. So let's put that in perspective. Currently in Las Vegas, Clear Capital has the REO saturation rate of 42%. Wow. That's tough to compete against if, again, you're that average, hardworking, tax-paying person and you're competing against a foreclosure right next to your home. Pittsburgh, on the other hand, has a 6.1% REO saturation rate. That's very, very good, and very good for sellers in Pittsburgh. Virginia Beach, another major metro market that Clear Capital reports on, has a 16.3% REO saturation rate. So anyway, according to Clear Capital's data, this past quarter is up 1.7% versus the same quarter in 2011 for Richmond. So I see the overall trend of the Richmond housing market continuing to go up. Now, I will say in 2011, end of 2011, Clear Capital had projected Richmond to have I believe it was a minus 1% or a decrease of 1% in housing prices for its 2012 projections. Based on what I was seeing from June or July of 2011, I had projected a positive 0.5% to a positive 1.5%. So I'm going to toot my horn and say that I definitely was more in tune with what was happening in the market than Clear Capital, just based on anecdotal evidence and my actual experiences of homes that I sold, and either as a listing agent or selling agent. But anyway, things are definitely moving in a positive direction. Now, understand that this does not automatically necessarily mean that your home is now worth almost 2% more this year than last year. What it does mean is that there are less foreclosures in our market that have been pulling down the average price of homes. It does mean that your house is probably worth a little bit more than last year. And quite honestly, if you've done the upgrades and maintained both the inside and outside of your home, there's a good chance you're at 2 or 3% higher than last year. But again, we're talking on averages, and when you take out the foreclosures, you have a lessening supply of foreclosures. Just by the nature of that, the overall housing price will increase. So very, very good news. Now let's get into some specific areas. Some areas, such as the far west end of Henrico County and the Deep Run, Godwin, and Glen Allen school districts, are seeing multiple offers on some homes. Boy, it's been since 2007, 2006 since we've seen anything like that. I noticed this happening towards the middle of 2011, and I've seen it accelerate into the spring and summer months of 2012. These homes are mostly updated with nicely landscaped lots. I just sold a home in the Glen Allen School District a week or two ago, and we received 11 offers on the home. 6 of the 11 offers were for more than full price, and many of them were significantly more than full price. And I feel like the buyer got a very good value. But my owner had upgraded the house. They have an absolutely beautiful yard, and there was quite a bit of demand for a property such as it. In Chesterfield, there are still a lot of listings in different price ranges. There's definitely movement in the lower end of the market, especially though for homes that have been upgraded and that are reasonably priced. The Robius Road corridor north of Huguenot Road is showing some positive movements in neighborhoods such as Rockshire and especially Tarrington, where they're still building new homes, and that is a beautiful neighborhood. I really do like Tarrington. Hanover County, neighborhoods such as Ash Creek, Milestone, Kings Charter, off the Atlee Elmont exit, are showing lower number of homes for sale. Prices have definitely firmed and now appear to be on a slow rise. So that bodes well for Hanover County. Rural counties such as Goochland, Powhatan, and Louisa are still definitely selling at a slower pace than you find in the city of Richmond and the suburban counties. In Goochland, currently right now, there are 162 active listings on the market, with the average days on the market of 131 days. There are currently 54 homes under contract in Goochland County, with an average time on the market of 82 days. So you can see definitely homes sell, take a little bit while longer to sell in the rural counties. The west end of the city of Richmond and the Mary Munford School District is definitely showing some good momentum as well. There are currently 57 pending sales in the Mary Munford School District, with the average time on the market being 46 days. This is very good. Again, the homes that are selling are those that are very competitively priced and are upgraded and updated. So, what's the bottom line? I would not pop the cork on the champagne bottle yet. I just wouldn't. That said, I'm comfortable with popping a top off a Red Stripe or a Stella to celebrate the slow rise off the bottom of the housing crash. I really think we are on the rise, and I really think it's for fundamental reasons. At some point, all markets are cyclical. I believe we've been scraping along the bottom for the past year and a half, and just fundamentally, the value of homes versus renting just makes sense. We have just extraordinarily low interest rates. So I think all those fundamental factors are leading to an increase in housing prices and definitely an increase in the housing market. Okay, feel free to give me a call if you want to talk real estate. Send me an email. Real estate's my business. I work 70, 80 hours a week at it. I love it. Would love to talk real estate with you, get your home listed, help you buy a home. You can reach me at 804-218-3143. 804-218-3143, or send me an email at rstockjr@AOL. That's rstockjr@AOL.com. Thanks for visiting, and look forward to hearing from you. And I'll be talking to you soon.